And welcome. Appreciate you guys coming. Me, Tom, and Anthony wanted to get everyone together today just to start a conversation. We know changes are coming in July. We know buyer affordability is on everyone's mind. So, what are we doing as lenders to work with you guys as real estate agents to all work together to get this done so we don't have any crazy changes? Everyone can keep making money and we keep trucking along all together in this wonderful world. So this is what we're here about. It's going to be a little bit of us talking. We would love to have some input from you guys. I know that's always scary to do on Zoom, but please, please, please try. Um, and we'll just get going. So, Thomas, would you like to start off? Tommy's going to talk
Yeah,
about uh, closing cost assistance.
income limits a little bit. Yeah, closing cost assistance, a little bit of income limits to how to get those different closing cost assistance. So I couple things that we could do to, lower those buyers' costs. The first thing that we're thinking, we're always trying to get them into a first-time home buyer program, which we do have through the state of PA, PHFA program. So I want to get into a little bit with those, as well as some of the income limits for some of the other first-time home buyers. So I'm going to share my screen here. Um, Bring this up, and can you guys see this program income limit here for me? Cool. So these are some of the program income limits that we can use to help get your buyers into something cheaper, per se. Not use as much closing costs. We know that they're going to possibly have to help you pay for commissions as well. So we want to really get this out there to you. Starting up in the left, the 3% down loan products. Those are both conventional loan products that we can offer you and your buyer. And this is also going to be able to get them a lower interest rate, as well as a little bit lower mortgage insurance, which ultimately is going to make everything more affordable. So with these two loan types, the Home Ready and Home Possible, it is 80% of the area median income. You'll see that AMI verbiage there. That means area median income. And that number is going to be 81,520 right now. So if they're under that number, we'll be able to get them approved for these different types of loan programs with the lower interest rate. Some of you guys might have heard of USDA loans. They're not that popular, but they are in some of the rural areas around Pittsburgh. So with the USDA loan, we can get them into a 0% down loan, which is lower than these 3% down options I just went over as conventional. The USDA product is a government product that is, I would say, pretty similar to the FHA product in terms of appraisal and things that they would ask for. That is a question we get a lot about the USDA. It also has to be in the rural census tract. So there is deemed on the USDA website where those places are. We could absolutely show you how to look those up if we have a USDA buyer put into that. Now, some of the things that I do want to really get into are these PHFA programs. Because the PHFA program that we can offer right now is a bond program, the interest rates are a lot lower than just a regular conventional loan or lower FHA loan. These are bond programs, but you still have to get a conventional FHA, USDA, or VA. You're still getting those loan products through the PHFA program. So it's not just, oh, he's getting a PHFA loan. You need to know if it's going to be a PHFA conventional or PHFA FHA. And that's going to kind of put us in different buckets of some of these other products that we have to offer. So some of the income limits on that, and this is always members in the household. So even though they could not be on the loan, it's going to be two people in the house. So we need to know about boyfriends, maybe grandma's going to live with them. We need to know everybody that's going to be living in the house for these specific programs. So for 1 to 2 household members, there's a KHL program, which is a bond program. We could offer it FHA or conventional. This is for a first-time home buyer. This rate is 5.625 with an APR, I believe, of 5.81 right now. So
sounds right on there, Tom. Great job.
Yeah, it's very, very close. Depending, there could be a little bit of blip on one bar to another, but that is where we're standing. And that's for conventional 5.625. I've done 3 of them this week where we beat out other lenders. I know that I'm beating out other lenders giving this deal because
and people argue with us. We have agents saying that rate can't be real. guys, all we hear about is this home affordability problem. No one can afford a home, but there are programs that we have that 5.625 or 5.25 or 0% down or PHFA allows, and Tom's going to get into it, $1,000 out of pocket. I have a buyer in process right now. They're bringing $1,000 to closing. And that's a real program through PHFA. It's the Pennsylvania Housing Finance Agency. They offer these programs that are wonderful. It's just, you need to qualify. The qualifications are a little bit more difficult, but that's where we come in. That's where Tom, Anthony, myself do the pre-approval, do the legwork so we know we can get them qualified. So I just want to I keep hearing oh, that must be some made up rate, or that's not a made up, there are buyers today we have in these programs that are absolutely legitimate. So I just had to throw that in there.
I appreciate that. No, I mean, these buyers are coming to me and they're asking what I could do. And I'm giving them this rate and they're saying, oh my God, I never even could get that. And I know that to be true because if you don't qualify for this, we could see a rate at 6.75 just at West Penn. I know
sure
those
this
rates are
this
out
isn't
there.
bothering you?
Sorry.
I can't get it on my phone and my.
All right. So we know those rates are out there that are the 6.5s. But I also know this rate's out here, and this is the rate that we're going to try to get every buyer qualified in if they come to us. This is our first option always. So if they qualify, we're going to go with this program. The only thing you guys really need to worry about on your end is they need a pest inspection, which sometimes, you might not elect to have any inspection. That I wouldn't suggest that, but that's on you guys. You will need a pest inspection for these types of loans here under the PHFA program, which is a minor blip to the borrower as well. That KHL product, it is a 5.25 with a 5.4 APR on that for FHA, VA, or USDA. So the government loans 5.25, conventional 5.625 with 3% down. I mean, we could really help some of these buyers out and get them a little bit better of deal. It's still a great deal. They won't even notice anything after they close the loan. It's not like they have to jump through special hoops. We are doing this all on our end. The next one under the KHL I want to get into, and we discussed a little bit about this, I know, over the last couple of years, is the KFIT product. So we have the KFIT product as well as the KFlex product. The KFIT product is the one that has the little bit of a lower income limit, as you can see, 102,600. So maybe this is for a first-time home buyer that meets those income limits, 1 to 2% household. I'm going to get into the whole stipulations of KFIT here in 1 second. But I do want to go to the KFlex. KFlex is for people that may not be first-time home buyers and need down payment assistance. So we're able to get them that loan, and they are able to make a little bit more money. The rate on that one, 7.375 with a 7.52 APR. So we're still sitting, for that buyer that doesn't have any funds, in the mid sevens, which again, a normal rate could be for not a first-time home buyer, 7.25 right now. So we call it free money. We know it's not free money. It is a 10-year deferred loan that's forgiven at 10% every year. We also have the KGov product and the HFA preferred. Those are some of the other products that we could do if they don't fit the income limit and they're getting a government loan on the KGov. And then I want to go over to here where I did make some KFIT facts. And there's some in the offices laying around in the ones that I cover, but we could also send out an email to you guys after this to make sure that everybody has these. I do just want to kind of cover some of these KFIT things and what's going on with them. So it is a 10-year loan for the KFIT, and it's forgiven at 10% every year. What that means is if you lived in the house for 7 years, 70% of that loan would be forgiven, and you only have 30% back at the time of closing. And that would go on their title, just like a normal loan or mortgage, and that would just need to be paid off with the proceeds, and they would net whatever's left after that. It is offered through the state of PA. It's the bond program. We can get a KFIT with any of the loan types, conventional, FHA, VA, or USDA. We do require maximum financing on these, though. The KFIT, 5% of the sales price or appraised value with no max dollar amount on that. They would just, as you start to increase your sales price, some people may not qualify with the income limits. So that's kind of what you need to worry about as the sales price starts to increase. Income limits there again, the borrower must have a 660 credit score to get this loan type. Very important to know. Most of the time, if they're under a 700 or 720 credit score, we do tend to push them towards an FHA loan because they're already getting a better deal. So just wanted to throw that out there. It is 660 minimum for this special. It's 1% or 1,000 of their total funds would go into the transaction. So like Ryan said, he has somebody come with $1,000. I know I just did one with Brooke out of the Fox Chapel office yesterday, where it was an FHA loan. We got 6% assist, and I didn't even need to use the whole 5% of the K-Fit to make sure that they were bringing their $1,000. So after their $1,500 hand money, my total read that they owed $62 more at closing. You must complete the buyer's home education course, which we will give the link to them. You could do it in person or online. That is free as well. And then there is an asset limitation. So they can't have a ton of money in assets or retirement after they do close. This is for people that actually need it. So that's kind of the K-Fit in a whole. Any of you guys have any questions on it? Ryan, Anthony, do you have any input extra to that?
I mean, it's such a valuable program right now. Like Tom said, you got interest rates for buyers that don't need closing cost assistance in the 5s. If a buyer needs closing cost assistance, we can get 5% plus what you can get with seller assistance, like Tom just said. So let's say a buyer has to pay in a couple months 3% commission. Well, they're getting 5 here plus any seller assistance you can guys get them. It's going to keep buyers able to afford a home, and it's going to be able to, you guys can confidently say, hey, here's the rules. It used to be, I mean, the news is crazy to me when it comes to this. The news is saying it just got cheaper for buyers to buy a home. From what I can tell, buyers never had to pay anything in commission. Now they're being forced to pay commission. So I don't know how it's getting cheaper for buyers to buy a home, but that's just me. I'm just a loan officer. Don't listen to what I have to say. But we're going to have to find a way that buyers can still afford it. And a way to do that is either ask for it in seller assistance, which may not be possible, or find closing cost assistance programs that can help. And that's what we're here for. We want to be part of your guys' team to help them get the best program.
I really feel that this PHFA program, since you would think that the rate would be so much higher on the K-Fit than a normal loan. I mean, we're on the conventional 6.25, government 6%. That's lower than going with a regular loan type, and you're allowed to get 5% extra. I mean, this loan specifically, I think, will get us through these first few months when buyers have to pay their commissions. I think this loan type specifically could help us through those lower end buyers that the seller may not want to pay that commission. So this product right here is A+. I don't think there's a better product out there right now. We as loan officers call it free money. It's a little bit of a lie. It's not free money. You do have to pay it back, but it's deferred and you don't see that payment. So that's kind of why we say it as that, but that is kind of what we're looking at for every single buyer that calls us. This is option 1.
Yeah, great job, Tom. And on that, I mean, everybody, I mean, how many times have we heard buyers say the rates are going to drop in the 5s? I'm going to wait to buy until I see a rate in the 5s. And we're already there. There are programs available that clients can get as long as they meet the qualifications as a first-time home buyer and everything else, that Tom just mentioned. So if you have clients that are on the fence, let them know we have this program. It's a great option for first-time home buyers, and they'll be within that 5% range that, their parents and their family members around the holidays or whatever is telling them, just wait until the rates come down. They're already there. But it's also about payment as well. So the client's payment is going to be very important, in the same process. So great job, guys.
Yeah, Anth, do you want to continue on since we're trying to save, buyers money? Best way to do that, ask the seller for seller's assistance. You know me, I'm always asking for seller assistance. I don't have to negotiate the deals like you guys do. I just have to say you can get seller assistance. So I'm always going to want to make it known to the real estate agents what they can ask the seller for. Because again, if they're not paying commission, another way to get it from them is just get it in seller assistance. So take it away, Ann.
Absolutely correct. So yeah, guys, so seller's assistance, ultimately, we haven't seen much of it over the last couple of years, but it is making a strong comeback. So, and ultimately, we may see more of this, in the near future. So as far as the sheet, now the nice thing is I'm going to show you where to find this sheet, and you can customize it based on purchase price. But let's dive into, the programs, what's allowed, the maximum allowable for seller's assist based on down payment and program. So conventional. If the client is doing less than 10% down, the max that they can ask for is 3% total. Okay. So if there's any other contributions, from the, seller or what have you, it's going to be counted in that 3% rule. So max based on $100,000 purchase is going to be 3,000. Now, if a client is doing 10 to 25% down, they can get 6%, a total of 6%. So in this case, it would be 6,000. And believe it or not, if somebody does more than 25% down, I've never had this personally. I don't know if Ryan and Tom has, but 25% down, the client can ask for 9%.
I had it happen one time on one of my deals, and it wasn't even the full 9%. We got 7.75%. What had happened was, after the appraisal came back, inspection, new sewer, new roof. You know how much some of those could cost on a $450,000 house. And we were able to get 7.75% to help pay for those things to make the deal still move forward.
Yeah. I mean, seller's assist definitely helps more buyers. Understandably, we haven't seen a lot of it because ultimately that affects the offer if there's a multiple offer situation. But, with changes coming, costs for buyers, affordability, seller's assist is very important if the client can get it. Now, conventional loans under investment products, the client can only get 2% is the total. A lot of times people don't realize, hey, they can ask for 3, or they can ask for 6 because they're doing 20% down requirement. That's not the case. Investment is probably one of the riskiest loans on the market for a lender. So they want a little bit more of the client's funds into this transaction. So they are going to cap that at 2% across the board. Now, moving on to FHA financing, ultimately 6% is the total amount allowed for closing costs, prepaids, discount points, whatever closing costs they're going to have. In the scenario, commission can be part of that. They're allowed up to 6% of the purchase price. Now, for VA, so this is always a question mark under VA because, you see some advertisements where the client's only allowed 4%, depending on the lender. That is not correct. The VA guidelines state that the client can have all of their closing costs paid for by the seller. So there is no minimum cap on closing costs. The cap for the 4% comes into play when it comes to funding fee or prepaid escrows or prepaid items. Okay. So 12 months of taxes, insurance, odd days interest is where that 4% falls into play. Typically 6% covers it. If the client's going to end up getting more, wonderful. We'll work that in, update those numbers for everybody to get that out. But typically 6% is going to cover those items that are going to be charged for everything.
So, Ann,
Now,
you mean
USDA
you don't have to have the name American or the U.S. flag in your name to do a VA loan? You can do VA loans, Anthony?
We definitely do. Yeah, you don't have to have the flag to show that you are doing those types of loans. And some of those advertisements out there make it seem as if they are part of the VA. There is no lender that's part of the VA. The VA doesn't lend the money. They just insure it. And the lender, broker, correspondent lender, Federally Chartered Bank actually lends that money specifically based on the guidelines.
Preach, Anthony, preach.
So yeah, we see a lot of stuff on our end. So USDA loans, guys, again, 100% of the loan is covered under USDA financing as long as it's in an eligible area, but they can ask for up to 6% of the purchase price as well. So essentially, to make it simple, anything government insured, FHA, VA, USDA, they can get 6%. If they're going VA, they can get a little bit more if the seller allows it. But the great options to provide to the clients as far as when you're working this up. Now, I know you guys are very excited, and I know you guys are like, wow, that's a really nice sheet that explains everything very simplified. So, where can I get that? The nice thing is West Penn actually provides so many tools to you guys that we actually built this into the Palm One Agent app. So you can actually go into your agent app, go to calculators, click on the concessions cheat sheet, and type in, and I'm just going to show you how quick and easy this is. You guys can have this for your buyer's packets or your listings, whatever you want to use it for, and just hit compute. Share and print. And voila. On the right-hand side, you can pick whatever one you guys want. And there it is. So it's going to be based on that purchase price that you put in there. It's already going to do the numbers for you. So you don't have to get the calculator out and start working up scenarios for 3%, 6%, 3.5%, all that good stuff. It's already built in there for you based on the purchase price. And you guys can print this out and share it with your clients, whatever you want to use it for. What kind of questions you guys have? Any?
That was pretty good.
Yes, I am wearing glasses. They're my readers. Okay. I don't wear them all the time, but when the 6s start looking like 8s and the 8s start looking like 6s, you got to put some on. So especially if you're doing finance.
Listen, Ann, some people in the business like to call themselves senior loan officers after 2 years. We all believe you well deserved the title of senior loan officer. So that's just proving it right there. So absolutely. Again, there's been agents, I feel like we use COVID in the industry as our mile marker right now. If you've been in the industry since COVID or later, seller assistance has not really been a factor. So as if we talk about it in the mortgage side, that it's pretty obvious. I understand that there's some of you that don't fully ever use it in your markets, but it's here. Every offer can absolutely have it. From our side of things, it's a great way to cover commission. If a seller doesn't want to pay it, ask for it with seller assistance. That's the worst thing they can say is no on if we're sitting up here in our ivory tower, if there's no multiple offers, anything like that. There was something.
Yeah, question in the chat. So yeah, the cheat sheet's going to be personalized if you have your agent one set up correctly, because it will just brand as your fee sheets would as well.
Yeah, you're not going to have Anthony's big old head on yours. It's just his because that's his app.
He will send it to you if you want his big old head, though.
Facts. Absolutely. So that is, again, that's seller assistance. It's a great tool. We keep hearing about affordability. In every type of loan, you're able to ask for seller assistance. And when Anthony talks about USDA loans, especially for you that are up in Cranberry or on the outskirts of Allegheny County, 0% down when you can get seller assistance. That means the buyer is going to bring little to nothing to close it. VA loan, 0% down with seller assistance. We have veterans getting money back at closing because they've gotten so much seller assistance. It can happen. There's different lenders that have different programs, and some lenders want to do 20% down conventional, out the door, talk to you later. This is what we do every day. We want to pre-approve your buyers. We want to get them into the best program possible. And does everyone fit in this program? No. Of course, when Tom talks about PHFA income limits, it's for 1 to 2 people. 102,600 when there's 2 of you is a little bit tougher than if there's just 1 of you. That's just unfortunately sometimes how the cookie crumbles. So some programs fit other buyers better in some cases, but that's our job. That's what we pride ourselves on. We want to get your buyers in the best programs as possible. So you guys look like the superheroes as well, because we want you to be the superheroes, of course. And we just want to do the dirty work behind the scenes. We don't want you to be loan officers. We don't want you to have to go crazy over things. We want to do the hard work, do the math for you, etc., so you don't have to do it. So I'm going to get into my section if my computer will cooperate with me, which it's not right now. So Anthony, tell us a story. You're muted.
He's muted.
If my PDF won't pull up.
You're
so
muted, Anth.
Keep talking.
That was the story. You didn't hear it? No, I'm kidding. I'm joking. So no, we're jumping into lender credits. Ultimately, we are ultimately an extension of your team, on the financing end. So, your success is our success. So, we are always thinking about different ways that we can help you, moving forward, in the scenario of clients, getting deals closed, et cetera. Ryan's jumping in, on lender credit. So Ryan, I'm going to let you take it away.
Cool. Yeah, appreciate it. So on the flip side, if you can't get seller assistance, if the buyer doesn't qualify for any of the closing cost assistance programs, there is something called a lender credit that a buyer can get. And what that is, again, there's nothing free in this world, though sometimes PHFA loans seem free. This is when you increase your interest rate to get a credit at closing. Sometimes it makes sense. Sometimes it doesn't make sense. It's the opposite of paying points. If you pay discount points, you're paying an extra cost to get a lower interest rate. In this case, you're going to get a higher interest rate to get a credit at closing. So this is an option that we have. And again, the biggest question we have a lot of the time is, well, Ryan, I might refinance, I might sell, we can do a break-even point depending on when if you're in the house. But if you think you're going to refinance down the road, you may not want to do anything with your interest rate because you think rates are going to drop naturally. I can tell you, no one can predict the future. I feel like at West Penn, we try to stay pretty conservative about trying to guess what the market does because it is unguessable, especially right now. We keep hearing that 2024 is going to be better for interest rates, and guys, they're about 0.5% higher right now than they were a year ago, other than those PHFA programs. So we're hoping to see a rate drop in 2024, but no one can predict the future. And we want to give buyers an accurate estimate of what their payment is now. And if they're good with that payment, they should buy the house. If you're predicting, I'm going to buy the house because rates are going to drop, then you shouldn't be buying this house. Maybe we need to drop in payment or whatever it may be. But lenders' credits are just opposite of discount points. And here's what I want to get into. We don't need to read all this. This is going to bore everyone. I'm going to get down to the bottom of the rate sheet. A lot of times agents will call or buyers will call and say, hey, Ryan, what's your interest rate today? And guys, technically, it can be pick your own adventure if you want to be a buyer. Here's our rates. I have between, and this was just yesterday, 5.75 and 7.625. I could offer, Tom could offer, Anthony could offer these rates on any conventional loan that we want. But I did some pricing out of the rate. Okay. Every lending institution has a markup. Every rate has a cost. So every company's rates are going to be different. So West Penn, we have an affiliation with you guys. We can keep our rates and fees pretty low, which means our interest rates are pretty darn comparable. So let's say yesterday, I could have given 6.75 at no cost. That was our base rate. Okay, not bad. Again, we were just talking about fives, low sixes for PHFA. This is what we're saying. This is why those programs were so important. We had a really bad jobs number for interest rates this morning. Jobs number was high. That means rates went up again this morning.
Yeah, rates went up, but the PHFA rates did not change. They haven't changed in a month.
Because that's a bond program. That's completely different than the secondary market. This is all high level mortgage stuff we don't want to bore you with, but it's why PHFA is so great. So I could give 6.75 no cost. But then a buyer goes, well, I want 5.75. That sounds much better. Well, sure, we can give that rate, but that's going to be a cost of $7,600. And as you can see, we can go down and I can say, okay, the principal and interest for this particular Estimate would be 1167. The principal and interest up here was 1297. That's about $130 difference. If I did that correctly, I don't know. I
Yep,
might
that
not
is
have.
correct. Yes, sir.
You put that into $7,600, and I believe the break-even point is about 58 months. So if you're gonna live in the house for 10 years, your break-even point's gonna be 5 or 6 years. That makes sense. If you're selling this house before then you're gonna pay for a lower interest rate. You're never making back the difference. We can go over those differences with your clients, or vice versa. Hey, Ryan, I don't have enough money to close. We can't get any seller assistance. I need to get into this house. What can you do for me? We can go all the way up to 7.625. And in that case, we would have been able to give them a lender credit of $5,200. So off of closing, they get $5,200 credit at closing. Now, of course, we don't want to raise interest rates if we don't have to in any case, but if affordability, if the cash to close is the only problem, there are ways around it. Are they always the best option? No. Is there one size fits all in this market? Heck no. That's why we have to get your buyers pre-approved as soon as possible. That's why sometimes as you're on the way back to the office and it's the first call to us to get pre-approved because you're writing up an offer, it can be difficult. Yes, we can get their information, we can pull credit, but if they're self-employed or we need to confirm income or they have a spouse that's not with them and they don't know what they make, but we want to get them into a PHFA program, it just doesn't put the buyer in the best scenario at that time to get that done that quickly. Pre-approvals are good for 120 days. So, especially with the new rules potentially coming up, you're going to want to get your buyers locked up. You're not going to want to take a buyer out that can't pay you or can't qualify or can't close, because that doesn't do anyone any good. So I just implore everyone, pre-approval is talk to us for 15 minutes. A phone call is the best way to do it. Yes, there's questionnaires. Yes, there's other ways that you can do things electronically, but a phone call is okay. We can all talk.
And yeah, as we progress into this unknown that we keep talking about here in July, give us a call. I mean, we're willing to work with you guys to figure out what the buyer's supposed to pay you, how we're going to make that work. And these options are some of the ways that we can help right now as lenders. They have not changed our rules yet. We do not have any change of anything, how it might play out. But these are some of the preliminary things that we think can help you guys keep the market moving. So reach out. We're willing to talk to you about it. We're willing to get down on the nitty gritty, see if your buyer has the funds to pay you for your commission. We haven't got word that we could finance anything yet, but these are some of the ways that we could help mitigate those problems.
Yeah, I mean, we were just talking about it in our sales meeting today of what we're trying to do as loan officers to help you guys out. We talk about fees. It's part of our job to go over closing costs with the buyer. We're used to it. We're comfortable. If adding an extra question of, hey, are you aware the rules have changed? Do you know you're going to have to pay your buyer's commission? It's how the agent gets paid. Everyone has to do it. If you can't afford it, there are other options that we can at least let you guys know, like, hey, they don't have the funds other than do it this way. So at least if you're putting in an offer, this has to be the offer, or you have to find a house that they'll offer seller assistance or find a property where the seller will pay commission. Again, we don't want you out there taking a buyer around if they can't end up closing on it in the long run. No one's out here to do charity work.
And this might slow the market down, not completely, but offers might not need to be in the first day that the house goes on the market. There might be, 2-3 days to figure out the best way to get that in. And that's something as a listing agent too, to think about, maybe you don't do highest and best on first day. You see what the buyers can navigate for a few days, and it's not a right now type of market.
Yeah, I mean, that's all great, because no one knows what's going to happen, right? We're all hypothesizing about what the market's going to be, but at least if we're game planning now for July, we can start putting ideas together and just keep it a smooth process. That's all we want to do, is keep the train on the tracks.
Do we have any questions or concerns from anybody out there?
No, I'm new. I just want to know, what are your business hours? Like, how late can we call you?
Call me whenever, Dominique.
Tom's
If
about to
I'm
have a baby.
sleeping or
He's
with,
gonna
if
be
I'm
up all
sleeping
night.
with my baby, I'm sleeping with my baby, I'm not going to answer, but we'll get back to you as soon as we can.
Okay.
Yeah, so we are like you guys. We are 100% commission. We do not get paid until the loan closes. We will work when you need to work. I think everyone that works with all three of us, I mean, this loan officer tree started with old senior at the top. He's been here the longest. He's trained myself and Matt Sokol. Tom came under me. So we're all kind of the same train of thought, the same way to do business. And we're not 9 to 5. We're not Monday through Friday. You can't work that way in this business. And that's not what we're here for.
Yeah, between the three of us, I think we almost have 40 years of experience in the business. So, I don't have most of that, but you know, we're all in here for a long time, and we've seen a few changes come about already. So this is another one we're just gonna have to navigate through together.
I just wanted to
think
say
that would
thanks
age it.
for, I just want to say thanks for being creative and trying to come up with a solution, guys, for anything that's going to happen in July instead of just panicking like everybody else is for no reason.
No,
Also,
no problem.
also just wanted to confirm, what if, is anybody over 18 in the household? You have to count, correct? Okay, so
That is correct.
some
Even
of those people with
part-time
those
jobs.
kids gotta get out.
And the crazy thing is, you know, if we're trying to use their money to qualify, underwriting's probably going to look at it as we can't use their money to help them qualify, but they will absolutely look at it as somebody living in there to go over that income limit.
Yes, absolutely. And I guess we'll just leave it to senior to give the last word before we head out. I think we all talked enough today.
Friday
Yeah, you guys
blessing.
did a great job. Thank you, everybody, for showing up and learning with us today. Ultimately, you know, again, we're an extension of your team. So whatever we can do to help you strategize, you know, I think that's going to be key moving forward. Is not just a, you know, quick pre-approval. Hey, let's get it out the door, which happens a lot, you know, at other institutions, you know, without really verifying that stuff. You know, we definitely take a closer look at it. We are trying to come up with different strategies other than the one we went over today to try to help you guys moving forward. And, you know, in the chaos that, you know, could be, but ultimately with changes comes opportunity. So, you know, you got to move with the motions. You know, if there's change, you got to change with it and make it happen. So I applaud all you guys for hanging in there. You know, it'll be okay. We're going to make this happen. So you got a great set of people, great set of guys on the screen for you. So, you know, ultimately your offices are great as well, you know, trying to keep you guys in the loop. So whatever you guys need, we're always here to help.
And if you have any ideas, give us a shout. We're willing to try anything, whether it's open house ideas or something for listings. Hey, I'll try anything once. So, all right, guys. Thank you. Have a great Friday. Have a great week.
Thank you all.
Thank you.
See ya.
Thank you.
See you guys.